What's good, YouTube? Welcome back to the Stock Hustle channel with your boy William. Today is Thursday, December 30th. It's also the last trading day of the year, as you guys will release or see this video as of Friday morning, December 31st. As always, to get some formalities out of the way, please remember nothing that is discussed on the channel is financial advice. I simply provide people financial education that I then hope they will use to understand you don't have to slave in 9-to-5s. You can easily hustle 24/7 in the market and still accomplish all those financial goals you have for yourself. As with anything, it always starts and ends with you and whatever you choose to put into something. But let's go ahead and put in some work today. So as you guys see from the chart today, we're going to be discussing DIS, otherwise known as the Walt Disney Company, right? So specifically, you might have caught a tweet on Twitter, specifically from the whale himself, tweeting out Nancy Pelosi did initiate some trades in Salesforce, which is CRM, Disney, and a couple other tickers. I have been watching Disney ever since earnings, which was back here specifically on November 10th when they had this massive drop-off after having discussed, metaverse, NFTs, having a really good positive outlook for 22, right? Hoping parks reopening, right? Disney cruises reopening, right? Essentially trying to discuss that if everything goes back to normal, all their revenue streams are going to return to full efficiency. However, in the earnings reporting, they did report not having met the needed number of subscriptions to Disney Plus, right, which was seen as a really negative catalyst because, again, they are competing in a pretty thick market with Netflix, Amazon Prime, Hulu, YouTube TV. Pretty much there are millions now, or hundreds of freaking streaming services out there, so the competition's pretty thick. However, I will tell you, as a parent of two young boys, Disney Plus is a pretty strong staple in my household, specifically for them. One is a 7-year-old, one is a 3-year-old. So pretty much any Disney movie that they love, they have access to. The oldest one is loving Marvel movies, so Spider-Man, Avengers, Iron Man, pretty much anything that he wants to watch is on Disney Plus. So it always seems to be the one streaming service that we frequently use, again, in my household. I'm sure other parents out there can relate to that specifically. So I don't necessarily see that the catalyst of them not meeting that number of subscriptions would dictate this massive drop-off that they've had, essentially bottoming out at the 141.96 area. As you guys do see here, we did recently meet that, specifically as of November 30th specifically. I think this was the day Omicron was also released, right? But since then, you do see a couple good things in the chart, right? Number one, you start seeing us hitting an uptrend, essentially trading sideways or consolidating in this channel from 141 to 153. As of the last 3 trading days, we've officially broken through this 153 level of resistance, right? Which you see here in the chart. If we take a look at the volume profile, right, the point of control being this thick red line, you see that the point of control is at the 176.64. As you've seen from other videos previously, when I quote or mention the volume profile, the point of control is like a magnet, right? If you're trading above it, it tends to pull you down towards it. If you're trading below it, it tends to pull you up towards it, right? In either case, being under the point of control is a pretty bullish sign, in my opinion, right? Because again, we should be heading towards it. As you do see, we spent the majority of 2021 in this middle channel from 187 to 167, only spending a little bit of time in the start of the 2021 and then a little bit of time at the end of 2021 outside of that main channel, right? Essentially, that's where it's most comfortable. And that's, again, something that the chart is specifically showing us, right? So being that we're sitting currently at the 155.93, that, to me, in my opinion, is undervalued, as we should be closer to that 170, 180 mark, right? Now, when we take a look at some of the indicators on the chart, right, you see that we are in a buying period on the MACD, and you do see that the stochastic is showing that we are currently in overbought. Now, just because we are in overbought does not mean we specifically sell. We wait for indications of a point to sell. Now, what are some indications that would tell us would be a good point to sell? Well, number one, you do see these wicks at the top of these candles, essentially letting us see that potentially the buyers are running out of steam, right, as the sellers are pushing the price down, which you are seeing these candles at the top, or the wicks at the top of these candles, right? Potentially tomorrow we could have a potential red day, bringing us down to this support area of 153.24 before we continue our course forward, right? I'm really bullish on this play tomorrow as a lotto play potentially, just because of unusual whales, right, and some of the things that I saw there. But I'm also bullish in the outlook of Disney, specifically for middle of 2022. I had recently texted this out to my text group for options that I picked up for middle of 2022. at the 160, 170, and 180 area, because again they were on sale when we were down in this 140 region, so they were really cheap at the time compared to where they were back about middle of the year or start of the year, right? But again, I do see that this is a good potential play, not only for short term but also for long term, right? Now when we go into unusual whales, right, and take a look, go into intraday analysis, you do see that there have been some bullish trades made, some bullish floor trades specifically, right, for some significant amount of money, specifically a bot call at the 155 again for the, you see the July 15, 2022. If you follow the whale on Twitter, you do see that he recently tweeted out Nancy Pelosi's trades, right? She actually has a dedicated section, which is one of my favorite things to see. Has a lot of information about Nancy Pelosi and how well she trades. As you see, Pelosi and a lifetime of trading, excuse me, you see that she is by far one of the better traders in government specifically, right? Her returns are well above 60%, just for relevance. Renaissance Technologies is considered the best hedge fund ever. The Medallion Fund produces on average 71.8 annual return or percent annual return before fees, essentially specifically from 1994 to 2014. Since 1988, this is just specifically quoting, right? His flagship Medallion Fund has generated an average annual return of 66% before charging hefty investor fees of 39%, right? And again, this is for Jim Simmons and the Renaissance Fund, or Renaissance Technologies, right? Their hedge fund specifically. But for her to produce above 60% is pretty damn impressive, I might add. And again, it's specifically not her, it's her spouse who essentially makes the trades, right? As you can see here listed. Well, Disney was one of the ones mentioned specifically for Pelosi, as you see right here. Disney call option for, I believe it was July, actually. Yeah, July 6, 2022. Or, wait. It's in a tweet, but he tweeted it out. Specifically, the trade is actually specifically in a tweet, but these are some of the other companies she did play: Amazon, Microsoft, Google, PayPal, Disney, and Nvidia, right? So, some pretty stellar picks by far, but again, it's just funny to see she actually purchased this as something I was already previously watching. But again, I'm using it as a confirmation of a stock that essentially is undervalued, right? When we go into the most active chains, right, to get back on topic, you see that for tomorrow's expiration, the 157.50 does stand out right away with high volume or high open interest and volume specifically. We're currently sitting at the 155.94. You see that the 160 does also stand out, which is essentially within range of a possibility of us hitting 155. Again, you see very frequent targets. For short time, you see that the January 7th also has the 160 alerting. January 21st also has the 160, the 157.50, the 165. Again, you start to see very frequent ticker, or I guess strikes, that are within range of where we are currently trading, that tell you essentially that the momentum could potentially push us to that area in the short term as well. When you go a little bit further down, it gives you, again, highest open interest, right? The bar chart that I like to show you guys specifically, right? You see right away, excuse me, that the 155 and the 160 stand out for this week's expiration. As I mentioned, for January 7th expiration, you see that the 160 again stands out. January 14th, 160 again is hitting or alerting. January 21st is where you start to see a turn actually bearish before we return right back to bullish momentum in consequenting weeks afterwards, right? Day before yesterday, we had some pretty large dark pool activity, 3.3 million shares traded essentially in the dark pool. Now remember, the dark pool, you got to take it with a grain of salt. Sometimes those block trades take a significant amount of time to fill before it will actually reflect in the chart. So it is just important catalyst, kind of like a grain of salt. You know, you take it, process it, and then pay attention to it afterwards, right? When you start to see the movement in the chart, right? Reaffirming with some price targets. Recently, there were some releases that were posted that now is on unusual wells. Morgan Stanley went from 210 to 185 with an overweight rating. Specifically, Marquise went from a 195 to, again, a 185 with an outperform. Loop Capital went from a 205 to a 190 with a buy rating reiterated. Wells Fargo went from 203 to 196 overweight. Citigroup went from 230 to 210 with a buy rating. Deutsche Bank went from 200 to 191. BofA Securities went from 223 to 191 with a buy rating maintained. And then KeyBank went from 225 again to 216. So again, at the 155 mark, that is well under the value that even smart money is predicting for specific price targets, right? So again, it's just another catalyst you add onto the pile, specifically when you're evaluating a play. As I said, I like Disney short term and I like Disney long term as a really good play for 2022 specifically, being that we are now essentially at the end of 2021. What better time than any to buy into something when it's affordable, right? And on sale specifically. When you go into the quick view specifically from the flow, right away you see that for tomorrow's expiration, the 157, as I mentioned, the 160, the 155, the 160 are alerting specifically. You see high open interest included with high volume. So tomorrow morning it'll be good to, or interesting to see how much of this volume actually rolled over into open interest to kind of give you a confirmation if tomorrow will be a green day or specifically a red day. One thing that I did not like today, specifically at the end of the day, was the SPY, right? So if you look at the SPY and you go intraday and a 10-minute chart, if my Mac would work with me, you see this massive sell-off right at the end of the day into aftermarket. This could potentially be a catalyst for us to have a pullback day tomorrow, which again is pretty normal. It's been pretty stable. You have a green day, you have a red day, you have a couple green days, and then you go back to red, right? It flips back and forth. So again, if the SPY does open up red tomorrow specifically, potentially that could affect Disney as well. Again, we do have support. Excuse me, we do have support right at that 153.24 area, so it'll be something or important area to watch to see if we bounce or if we break through it, right? Especially if you are looking to trade this short term for next Friday or the subsequent Fridays after that, right? But again, I think you guys get the point. As always, guys, if you have questions, leave it down in the comments below. If you found value from the video, leave me a like or a comment or both, please. Otherwise, you can always hit me up on Twitter or IG. And until then, I'll catch you in the next one.